Welcome to Jay Wu Estate Agents Monthly Market Update November 2023. Let's talk about the latest trend in the economy and financial market. It's Tuesday 14th of November 2023. So let's begin. In October, global markets faced challenges as stronger economic data kept central banks on a hawkish trajectory, fueling concerns about an extended period of higher interest rates. Uncertainty stemming from unexpected events in the Middle East also contributed to market unease, particularly in terms of energy price implications. Government bond yields, including the U.S. 10-year Treasury, crossed the 5% mark as investors adjusted to a reduced risk of recession and potential rate hikes, impacting both equity and bond markets. The MSCI World Index declined by 2.6% for the month, while the Emerging Markets (EM) Index fell by 2.9%. The Global Aggregate Bond Index also dropped by 1.2% during the month. In the Australian economy, quarterly inflation data reinforced the idea of persistent inflation. Prices rose by 1.2% quarter-over-quarter in the third quarter, driven by increased fuel prices, rents, and insurance costs. Despite a decline in year-on-year price comparisons, 5.4%, the momentum may not be slow enough for the Reserve Bank of Australia, RBA, which has expressed a low tolerance for prolonged deviations from its inflation target. Retail sales in September showed a 0.9% increase, with prior month's figures revised upward, reflecting relatively widespread spending. The data suggests that broader consumption indicators, including services, are likely to show strength, though a decrease in the savings rate and the lagging impact of higher mortgage rates could affect discretionary spending. In the labor market, there were mixed signals, with the unemployment rate declining to 3.6%, largely due to a fall in the participation rate rather than robust employment growth. The breakdown of hours worked, slowing employment growth, and a decline in job vacancies indicate a potential rise in the unemployment rate in the coming months. In the realm of equities, the ASX 200 experienced a challenging month, with a 3.8% decline following a negative September. Small caps fared worse, with a substantial 5.5% drop. Among the sectors, utilities managed a 1.7% rally, but 10 out of 11 sectors were in the red, with the worst performers in IT, minus 7.6%, healthcare, minus 7.2%, industrials, minus 6.4%, and real estate, minus 6.1%. Australian equities underperformed global indices, including the MSCI World Index, which had a milder 2.6% decline. The S&P 500 fell by 2.1%, Japan by 3.0%, and Europe by 3.4%. The Australian dollar's movement somewhat offset the weak global equity returns. If you have any further questions, please do not hesitate to contact me on 0402 686 929. The information presented in this video is for general informational purposes only and should not be considered as professional advice. While we strive to provide accurate and up-to-date information, we make no representations or warranties of any kind, express or implied, about the completeness, accuracy, reliability, suitability, or availability concerning the content contained within this video.